Bitcoin just made a new all-time high in Argentina. And look, most crypto investors are simply not ready for what's coming next, guys, because it's coming for your currency too. People are asleep at the wheel. They're still stuck on recession fear, still licking their wounds from trying to trade like it's 2021. Look, if you're only watching the headlines, you're missing what's happening under the surface. It's insane. But if you look at the big picture, the macro is lining up. Things are getting real crazy out there. The next phase of the crypto bull market is sneaking in the back door. It's about to steal your beer, and it's kicking that door wide open, okay? In this video, I'm gonna break down why the stars could be aligning for Bitcoin and what smart money is already doing before the headlines actually catch up. Let's start with the lifeblood of financial markets, and that's liquidity, baby. Everyone loves to stare at the M2 money supply chart. But as Arthur Hayes has previously pointed out, BitMEX CEO, it's not the only thing you should be watching. It's actually the MOVE index. This is the volatility tracker for US Treasuries. That gives us a front row seat to when the Federal Reserve is likely to step in. And basically that's anything above a score of 140. On April 9th, it spiked to 139.88. Good enough, right? Flirting with those previous crisis levels. Now, the interesting thing here is that they don't need to shout quantitative easing. Everyone's waiting for quantitative easing. There's other ways to juice the markets. The Treasury has already started buying back older, less liquid bonds from investors. It's not exactly quantitative easing, but it's kind of quantitative easing in everything but name. Liquidity essentially is starting to creep back into the markets. Risk assets are starting to notice, and that's bullish, full stop. Now let's come back to that M2 chart. Liquidity is rising, and Bitcoin historically lags that rise by about 3 months, which means, of course, if this correlation holds up, then we are in for a multi-month crypto pump, sending Bitcoin to new all-time highs. I know it's but recession fears. Watch the liquidity, man. The recession might come later, it's fine. Watch the liquidity. Bitcoin ETFs have already been front-running the next market pump, adding $2.7 billion in a single week, followed by $591 million on April 28th alone. Wall Street's taking notice. Retail investors, of course, as always, panic selling. Institutional investors have been loading up on ETF exposure like it was Black Friday. And in the crypto market ecosystem, Tether's market cap, that's the US dollar stablecoin, hit an all-time high of $145.6 billion, up over $8.5 billion in 2025 alone. Here's why that matters. Tether dominance is falling in spite of the fact that the market cap has been rising. It means that people aren't just parking their cash, they're rotating into risk. Every time this breakdown happens, Bitcoin breaks out and it rips higher. Right now, Bitcoin is flashing green across multiple different time frames and charts and indicators. But before I break this down even further, guys, if you want an exchange that's going to let you trade without any barriers, doesn't matter what country you live in, okay, you should be checking out FEMEX, okay? So if you want somewhere where you can long the rips, if you want somewhere where you can short the dips, right? Yeah. You want somewhere that's going to give you some sweet bonuses to actually try out the exchange and get signed up, check out FEMEX. Available to everyone, everywhere, no KYC. You'll get $10 for starting your account. That's just a welcome bonus. Hi, here's $10. Here's your first trade. You'll get $500 in deposit bonus. So you deposit $2,500, you get $500 back in deposit bonuses. That's some serious money you can use to do some trading on the exchange. And you can get up to $1,200 in trading bonuses. Check it out. Link down below. Don't wait. It's a limited time offer. Get that free money. Start enjoying trading like you should. Okay, so let's check out the weekly chart here. Shows a nice move here on Bitcoin. The downtrend has been broken. We've reclaimed the 21-week and 50-week EMAs, which are classic bull market signals. Now we're recording this on Thursday, so by the time you're watching this on Saturday, all kinds of mayhem may have happened, obviously, in the markets. But these are all classic bull market signals. Remember when we lost the 50-week EMA after Trump's tariff bombshell? Well, we didn't last very long. We just had a little wick under. We took it back and bounced off it. That's bullish. It means that the bulls stepped up when we needed them to step up, and then we've reclaimed that bull trend once again. Bitcoin's price has been trading like a bit of a stable coin throughout most of the week, feeling stuck around $94,000. Again, by the time you watch this, that may be a very different situation. But these strong levels of resistance tend to have pretty violent breakouts. It was also on Bitcoin's first closing price of 2025, adding psychological weight to the line, so any breakout there or rejection there becomes much more important, and look for retests there too. We also have the 3-day MACD, which has flipped bullish recently. That's when the short-term moving average crosses above the long-term average, another classic signal of a new uptrend beginning. The last time that happened was October 2024, followed by an 88% jump in Bitcoin's price over the 3 months that followed. Pretty significant. Well, crypto has been heating up. The macro has been melting down, which has kept people sidelined and worried and fearful. Can't buy Bitcoin now. Macro is going to go to zero. That's unfortunately what we need for the Fed to intervene. The US dollar index is in a bearish downtrend, down 8% year to date, which is what Trump wanted, by the way, still below 100. Trump wants a weaker dollar. He got a weaker dollar. Job openings missed expectations in March, coming in at 7.19 million versus 7.5 million expected, showing weakness in the labor market, which is going to keep the Fed up at night. The consumer confidence level has collapsed to 86. It's the lowest level since April 2020. But the Fed's nightmare has got even worse. You see, U.S. GDP for Q1 came in negative at 0.3%, way below the 0.3% plus expectation, and way down from the numbers just a few months ago, which was predicting like a 3% rise in GDP for Q1. Trump's tariff wars killed the economy. We are one bad quarter away from a technical recession, which is with 2 quarters of negative GDP growth. Stimulation will be needed ASAP, or things are going to get super ugly, super fast for Trump, and there's going to be, pitchforks in the streets. So unsurprisingly, the odds of a rate cut in June jumped to 57%. And that number is only going to go higher, especially if the next CPI print shows stagflation starting to creep in. Imagine this, no rate cut, followed by an ugly inflation report. Now that could cause a full-blown market panic. Even Trump knows it, and that's why he's been out here pressuring Fed Chair Jerome Powell to act before they even get further behind the curve. And let's be real, it's 2025. And keep in mind, this is the year in Bitcoin's 4-year cycle, if we can still find that model relevant, where the price has historically peaked. And this one has got some serious 2017 vibes with the potential for explosive upside. Remember, that's when Trump came in, weakened the dollar, all that kind of stuff. Markets exploded, tons of new adoption, big buyers jumping every week, new corporates announcing, ETF inflows, countries, all that stuff. We're not just in the middle of a Bitcoin cycle, we're also at the bottom of the global business cycle right now. And as that bottoms out, the next 12 to 18 months are typically up and to the right for all assets, stocks, real estate, crypto, everything pumps. We are at the bottom of the business cycle, top of the business cycle as the market tops out, not at the bottom. And it was the bottom in December too. This isn't opium, it's historical rhythm. 2012, 2016, 2019, Bitcoin's price touched down at the same point in the business cycle. And what followed each time? Bull market madness. And here's the glue tying it all together. Liquidity, baby. We've already had a liquidity breakout and a successful retest, and that's the kind of setup that launches the final wild mania phase of the bull market. And it doesn't happen overnight. It takes months to brew and to finally pop off. When it does pop off, it takes months to fully happen. Forget the halving, forget the ETFs. Liquidity is the big fuel, and liquidity is coming. The fact that global liquidity leads risk assets shows exactly what is coming next. How high does Bitcoin go in this situation? It's going to depend on how much liquidity gets unleashed globally. Okay, now there's estimates from the guys over at like Real Vision and stuff that we could see liquidity pump well into 2026. And by the look of things as we're seeing right now, they're twisting the taps wide open globally. It's not just the USA, it's a lot of countries around the world. So the question is, did you buy Bitcoin on April 9th, right after Trump's Liberation Day? Because now could be the second best time to get long on Bitcoin. Oh, you missed the bottom, sure. Doesn't mean there's not still opportunity. Or if you maybe want to get higher beta, altcoins, obviously riskier. Now, most investors will see the signals after the move. But if you made it to the end of this video, you've seen it earlier than most. Don't waste that advantage, okay? Pay attention. Now is the time to lock in. Thanks for watching. I'll see you next time.